Every kind of system that gets drunk on debt goes to centralization, currency debasement, and war. But the article I wrote today that comes out tomorrow is literally titled Global Snapshot: Stupid, Broken, and Evil. The evil being the final opportunity. The financial system is stupid. The bond market is broken. The last checkbox we have to distract us completely and take the blame off our politicians is war. And that is one place, Dunnigan, where I hope I'm definitely wrong.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for September 16th through September 23rd, 2024, while supplies last. This week, we have a very limited supply of Pamp 1-ounce Silver Rounds at just $2.75 over spot per ounce. We also have 1-ounce gold Rand Elephants from the Rand Mint in South Africa for just $59 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're delighted to have this widely followed guest. Matthew Piepenburg is a partner with von Greyerz. He works in Switzerland. He's an expert in gold markets and the value that gold, the importance that it plays in ensuring our stability. And he's also a student of the financial markets around the world and history. Matthew, thank you for joining us again here on Liberty and Finance.
Well, thanks for having me back. I'm always looking forward to the conversation, so it'll be good.
I should mention for our benefit of our viewers that today we're recording this is Thursday, September 19th, 2024. We just had yesterday a emergency surprise rate cut by the Federal Reserve of 0.5%, and there was quite a bit of consternation prior to that, people saying, how is it that we need an emergency rate cut if the economy is reputedly so strong and the consumer so strong and the labor market so strong, et cetera. And your take on the drivers for this rate cut and the likely fallout, both near term and perhaps longer term.
Look, I'm not alone in this. This was hardly a nail biter rate cut for a lot of us, and for many. At the beginning of the year, there was talk of 6 rate cuts when the Fed kind of forward guided that at the end of 2023 and into 2024. And that was the big talk at the conference I was at in Vancouver in January. I said I thought it would probably be July or September. That doesn't mean I'm a genius. I just knew there'd be delayed and the rate cuts would come. I've been wrong on rate cuts. I thought there might have been a rate cut in 2023 when we had the banking crisis, and that didn't happen. But this one, for many, really wasn't a shocker. Nothing happened in July, and so by the time September came along yesterday, many were saying it would probably be 50 basis points, which is exactly what it was. I think in a lot of ways the markets have priced this in. I think the implications of it are far more obvious and far more predictable. It was always a matter of when, not if, the Fed would have to pivot toward rate cuts, because it was a choice between saving the dollar and saving the system, and the system is the bond market, and the bond market really is the Fed's real mandate, not employment and inflation, in my opinion. And so there's a number of reasons why this was simply inevitable. Again, not a nail biter. At the end of the day, the dollar had to be sacrificed for a number of reasons. One of the most obvious, Dunnigan, is just the fact that, there's about $15.5 trillion in U.S. Treasuries that have to be rolled over in the next 3 years. And that's a lot of money in a short period of time that has to be refinanced at the government level for Uncle Sam. And, the coupon, which is the sticker price for those treasuries, had an average weight of about 2%, 2.3%. But because of the higher for longer policy under Powell and the raising rates and the price pressure that put on bonds, the actual true interest expense, the yield, was 5.3. So that's double the coupon. So that's an expensive and painful bill. The Uncle Sam literally couldn't afford Powell's policies. So this rate cut was, again, somewhat inevitable. It was really too expensive for Uncle Sam. It's also too expensive for foreign markets and everyone else. But, it's also, I think, done again, the pivot to the rate cut and the soon-to-be pivot from QT to QE is just Powell's way of admitting, without saying it out loud, that his war on inflation was lost. We didn't hit target 2%. They may have retargeted inflation for 3%, and that might have saved a little face. But look, if, to your point, if things are going so well and the markets are great and labor is great and employment's great, why do we need a 50 basis point cut going into an election cycle at the end of the year? So again, not a huge shocker, but it's the classic bipolarity of what the Fed does versus what it says. Fed is just as political as any other branch of the four branches of our government now. You can't listen to what they say. You look at what they do, and frankly, throwing in the towel and cutting rates when higher rates was supposed to be the fight against inflation, and throwing in the towel before they hit target inflation was just their way of saying America can't afford rising rates to fight inflation. We couldn't do it much longer, so we caved. But inflation, as I've said many times, is the end game no matter what. If they kept rates higher and didn't cut, we still would have had inflation, because that's the classic fiscal dominance argument that if you raise rates too high, then Uncle Sam's bar tab gets higher and higher. And the only way to pay for that is to print more money, which is inflationary. And if you don't raise rates and you cut rates, well, that is also inflationary. And so this really is damned if you do, damned if you don't. Inflation's here to stay. That doesn't mean we can't have disinflationary or even deflationary moments if the markets mean revert, even though they're effectively subsidized by the Fed. If markets mean revert, or we have and we are going to be, and I think we're already in a recession that is highly disinflationary, and raising the Fed funds rate from 0 to 5.25 or 5.25 plus in a short amount of time is inherently deflationary or disinflationary. But the end game will always be, we're in debt up to our ears. We're going to have to cover the delta between tax receipts and GDP, which isn't enough, with something that will be money mouse clicked out of nowhere, and that is inherently inflationary. So we can have disinflationary or deflationary moments, but America is looking a long road of inflation, weakening dollar to cover and monetize our debts. And again, and I'll stop here, keep it simple, stupid, instead of getting into all the complexities, especially as we start. When we took away the gold chaperone from the dollar, that meant you could create as many as you wanted, whatever politician, red or blue. In 1971, when we did that, our debt to GDP was 38%, and our government debt was 426 or 425 billion. Well, you take away the gold standard and look at where we are today. Our debt to GDP is 125%, and our government debt is 35 plus trillion. That's not a coincidence that our debt levels and our money supply levels have gone exponentially to the irrational since we lost that chaperone, and since politicians were able to overpromise and underdeliver by buying votes, buying a Nobel Prize for Bernanke, and buying time by going deeper into debt, issuing more and more IOUs, kicking the can to the next generation, and ultimately to Main Street in the form of inflation, and then blaming the consequences on something else, whether it's Putin, global warming, COVID, et cetera. The real sin is in the bathroom mirror of these policymakers. And so that's where we are. We're now in an inflationary policy, and more liquidity just means more debased dollars. And unfortunately, I don't see an easy way out of that. Even if even if we have a disinflationary event like a recession or a market mean reversion.
I mentioned, introducing you, that you're a student of history as well. In the past, when the Fed has finally got around to reversing, pivoting, as you called it, and cutting after tightening, how has that played out in the overall credit cycle? And is it an instant fix, medicine that's needed, and you're off to the races again, or is it the beginning of a lot of pain for a lot of people, and what kind?
Well, it's a good question because, historically, in 2018, Powell, to his credit, did try to take away the punch bowl. He did try QT while he was raising rates at the same time, and that ended by 2019 in a disastrous December, Christmas, if we remember those 12% moves and 1,000 basis point moves in the markets. Huge panic. Within a few months of that, we had the COVID crisis and unlimited QE. It buys time. To Luke Groman's point, you can subsidize through QE or through rate cuts like this, and it can last for years, or it can end tomorrow morning, because there's so many needles pointing at this debt balloon and this extend and pretend policy. But to answer your question, you can buy dips, you can save markets by providing immense liquidity or making the cost of debt cheaper by playing with rates or playing with the supply. When you have the power to affect the price and the supply of money, it can have temporary effects. To even Ernest Hemingway's point, that can buy temporary prosperity. The problem is it's giving too many martinis at the party, though. They can make you happier and happier and happier hour after hour after hour into the party. But at some point, those martinis, instead of becoming sources of happy buzz, become a source of and hangover and sickness. And the real question now, and I don't think anyone can predict when it becomes too much, when QE and rate cuts are no longer stimulative to the markets. But technically, and this is the truth of modern monetary theory, which, by the way, is neither modern nor monetary or a theory, the idea that you can print money to solve a debt crisis. Technically, you can always sustain the markets, and you can always sustain the bond markets and keep yields under control with artificial liquidity, but you will always do so at the expense of the currency. And that's what von Mises warned. That's what David Hume warned. That's what anyone with anyone who understands credit markets and yields and currencies knows that there's no such thing as a free ride. Politicians have tried to sell us a free ride since Bretton Woods was repealed in 1971. But the truth is, yes, technically, historically, you can buy time for the markets. You can buy time for bond yields. You can buy time for extend and pretend. But you cannot do that without suffering some consequence. And the consequence that we are suffering, and we will continue to suffer, is the debasement of the money in our wallets, the money in our portfolios, the way we measure our wealth. In just the last 4 years, because inflation is a rate of change, not a rate of price change, we've lost over 25%, 24% of the purchasing power of our dollar in just 4 years. So when you add on that invisible tax of inflation with the higher interest rates that many Americans pay in credit cards and car loans or whatever debts they have, and then actual income taxes, again, it's not sensational. The middle class to the upper class, but the middle class feels it the most. They're basically running uphill in roller skates because their dollar is losing purchasing power because we have debased it. We have created too much of it in the broad money supply, and not just through Federal Reserve mechanizations. Many people said I would have rather had a recession than inflation. I would have rather had other things more honestly told to me than the destruction of my currency, because that's death by a few cuts, not just 1,000. It's a slow frog boil. And regardless of the CPI scale, whatever that is, which is everyone knows is fiction, we all feel the loss of our purchasing power. We all feel the pain of inflation. And so, yes, you can save the system historically and get quantitative empirical data that shows the markets are here, the yields are coming down, this or that is doing better. But if you measure it against the purchasing power of the dollar in your wallet, you're losing. And that's subtle, and that takes a little bit of nuance to understand. I think more and more Americans and citizens of the world are starting to understand that. Certainly Eastern central banks understand that. Certainly the BRICS understand that. Certainly your listeners and ours and our clients understand that. The question is, when does that become obvious to everyone? I think right now Powell has said, and he said, yes, I'm not worried about inflation so much. I'm not worried about employment. Everything is strong. Yet in the same series of sentences, he says that he's worried about employment and inflation. So you're getting word salad from our central banker. But again, Powell's a politician. He's no different. And the Fed is a fourth branch of government, sadly. And you really have to watch what your dollar is doing, not what a central banker is saying. And that may sound cynical, but I think we're past the point of being naive now.
I think you're talking to accurately about the middle class. They feel it, and the lower class earners and savers and retirees feel it because their earnings, their savings, and their retirements are getting cannibalized by the effects of this currency debasement. We know personally numerous people who are having more and more of a hard time making ends meet. I mean, as a precious metals broker, I'm dealing with clients calling up for the first time saying I've stacked forever and now I'm having to sell so that I can pay my tax bill, or people who've been laid off and they're saying I'm having to sell because that's going to replace my income. But for the government to tell us, no, you're doing just fine when people are hurting, and we've had people having to move out of our 55 plus community that we live in because they can no longer afford the combination of the HOA fees and the taxes and everything. And 5 years ago, their financial planner told them, you're set. You got it. You're right on track. Everything's working just fine for you. But they're finding that their meager Social Security checks don't go as far. Their yields that they're able to get on their savings or certificates of deposits or whatever, even though nominally the numbers may be there nominally, but they just can't buy as much. So people are hurting. And your view of how well you think people are going to understand in time to really know that they've been stolen from, that their earnings, their retirements, and their savings are being stolen from them.
Well, that's exactly right, because inflation, especially when it's this pernicious and this misreported and this dishonest and this devious and this ultimately inevitable, is theft. It's theft. If you lose 20% of your purchasing power in a matter of a few years, that's palpable. And if your wages or Social Security checks or annuities in nominal terms are the same, but in real terms are losing, you are literally slipping backwards slowly at first, then, as Hemingway described, poverty all at once. And the question is, and again, for the middle class, which has not enjoyed the benefit of the inflation and risk assets, because the top 10% has enjoyed the vast majority of the S&P rise over the last many years, the middle class will feel it the most, and that explains why the middle class is far more political and far more polarized now than any time that I can remember as an American, whether I'm overseas or visiting. And that's true everywhere where inflation becomes a problem. The truth is, inflation, even for politicians, is embarrassing, and they understand that, and that creates a lot of frustration. But ultimately, politicians don't want to talk about real inflation, so they misreport it by at least 50%. And they also talk about other things. They distract through bread and circus or through divisive policies or divisive distractions. Again, we've talked about this in the past. Transgender bathrooms aren't nearly as important as not being able to make your mortgage payment or to stay in your condo because of HOH fees or whatever. So these things are going to become more and more powerful. The question is, can it be fixed, or is it even wanted to be fixed? Inflation cannot be fixed in one term or through one political fiat, because we simply have no other way to purchase our own IOUs other than to debase the money to pay for that. And that IOU, that U.S. Treasury, and that debt is key to our survival. They will misreport inflation, but the sad reality is, unless we cut spending, unless we balance our balance sheet, or fix our balance sheet, or reduce our balance sheet as a government like you would as a family or in a company, unless we do that, we're going to have to consistently debase money to pay for our own survival as a nation. Well, that always is at the expense of the citizen. The politicians will somehow survive. The citizens won't. So what do? Again, they'll misreport inflation, or even worse, to Hemingway's point, they'll distract us in wars, in which case those are inherently inflationary as a society. And in war, capital controls, yield controls, rationing becomes patriotic, and you can blame it on an adversary rather than your own politicians. I hope that isn't what happens. The only other solution to inflation besides war would, again, be the cutting of spending, which is political suicide. You can't cut entitlements, and you probably can't cut military by 40 to 50%, which is what we need to do. Or you can't let banks fail and not bail them out, which is what we need to do. So the kind of tough requirements necessary to avoid inflation are politically untenable at this point. And so that's why I'm not optimistic in any easy solution. Whoever's in the White House next, I almost have sympathy for. As I've joked before, it's like becoming the captain of the Titanic after the iceberg. It's going to certainly take more than 4 years, and it's going to take a population that's willing to suffer austerity for a greater good. They'll only do that if they trust the greater good, if they agree to the greater good, and if a leader will tell them that austerity is coming. The problem is you can't get elected by promising austerity. Whether you're talking about cutting taxes or whether you're talking about price controls, left or right, red or blue, both of those are going to be highly inflationary anyway, and they're not going to solve the problem. So I think we're stuck in a corner now. I think, sadly, I don't have a good solution for the inflation, and I don't have a good solution for the debasement of our currency, which is historically, without exception, what always happens when a nation gets this far over its skis in debt.
Well, one of the things you haven't mentioned is the survival technique that has been used for millennia by those who want to protect themselves and to actually have a savings that remains solid for them. That's to hold hard assets. And you mentioned that that's predominantly what is affordable to the upper classes. The middle and lower class have a harder time holding on to those levels of meaningful assets for their future. But even keeping your nest egg in a bank account, savings and checking and certificates of deposit, et cetera, versus in hard assets like, say, gold and silver. We have, and I'm going to tap you especially on this because of your European location here. We have a global pivot away from reliance on the U.S. dollar. And in other words, it seems like a lot of the world are voting with their feet and saying, we want out of this game. We don't want to be stolen from. We don't want to have the theft of our purchasing power just taken away by the debasement of the dollar. So they're stepping off the dollar system and into real assets. Can you talk to us about what's going on globally in the pivot away from the dollar?
Absolutely. And again, it's very important. And again, it's a very good point. And that is happening. And I think that's for the good, because now the rubber's meeting the road. It's enough with the platitudes, enough with the political talk, enough with even the alliances. The U.S. dollar and the U.S. IOU, the U.S. Treasury, simply is not as trusted as much today as it was yesterday. And there are a number of reasons for that. I think one of the most obvious is just the fact that the U.S. is a declining asset. The U.S. Treasury is a declining asset issued by an increasingly indebted nation. Issuer. The U.S., again, we've talked about, is no longer the nostalgic, iconic U.S. with the flag on Iwo Jima or Clark Gable in the Hollywood and these great iconic kind of images and strengths of post-World War II America. That's a wonderful image. It's a nostalgic image. But fast forward to where we are today, it's not the reputation the U.S. has at home and certainly not abroad. Here in Europe, we are not respected for our domestic policy, our fiscal policy, regardless of what you think of our foreign policy and our series of direct or indirect wars. If you just look at America financially, it's not as respected. And the evidence of that is literally everywhere. Andy Schectman, who you know very well, has talked about this brilliantly. I'm completely on the same page. The most obvious sign of that, I think, is the weaponization of the dollar back in 2022. Whatever you think of American foreign policy, Putin, Zelensky, again, it's not here to talk about, but when we weaponize a neutral reserve asset like the dollar, the rest of the world distrusted that asset, demanded that asset less. When there's less demand, that asset, that dollar, that treasury becomes less loved, less demanded, less powerful. The evidence of that in Europe, right here in Switzerland, where I work, is the Bank of International. It's not a coincidence in 2023 that the Bank of International Settlements described the U.S. Described physical gold as a tier 1 asset. The only other tier 1 asset that the BIS recognized until that point was the sacred cow, the 10-year U.S. Treasury, the U.S. bond. But that bond is not respected or trusted as much post-2022 as it is today. So as it was before that. So that genie never goes back in the bottle. You weaponize a currency, the IOU of that weaponized country becomes less loved and less trusted. That's also why the BRICS membership seems to go up every week, every quarter, new members. That's why 45 nations are trading outside of the U.S. dollar. These were considered sensational headlines when we warned about them, including Andy back in 2022. Everyone thought it was hype. De-dollarization is not going to make an edge. The U.S. dollar is still king of liquidity. It's 85% of FX transactions. It's the key to the derivative markets. It's the key to the Eurodollar markets. These are all true, but that doesn't change the fact that the dollar may be king in liquidity, but as a reserve asset, as a store of value, as a savings asset, the dollar is no longer king. Gold is king. That is not the bias of a gold bug, whether I'm in Switzerland or in the U.S., whether you're trading from London or you're in the New York or COMEX or the LBMA. The BIS is telling us, and the central banks in the East, which are buying gold at record levels and dumping U.S. treasuries at record levels, are telling us that they don't trust the U.S. Treasury as much as they do gold as a savings asset, as a reserve asset. And again, those who thought that was a sensational comment about de-dollarization and the rise of the BRICS and the rise of trade settlements outside the dollar said it still can't replace the king dollar. I've never said it had to replace the dollar. The dollar's not going to be replaced. The yuan or the ruble or the rupee or the real are not going to be the next world reserve currency. What it does mean, though, is the dollar won't be replaced. It's being repriced. And we see that consistently now. The fact that the COMEX is no longer having open positions, but they're taking actual delivery. The fact that there is less and less segregated, allocated gold and silver for the COMEX banks or the LBMA banks to manipulate the gold price is not a coincidence, because nations want their gold at home. They don't want it on these exchanges. They don't trust these exchanges. That gives those exchanges less power to manipulate the gold price. The repatriation of gold in 30 countries in the last year and a half is not a coincidence. The oil trade is not a coincidence. The more and more trades outside of the U.S. petrodollar are taking place every day, 20% less than they were the year before. These were unthinkable things. Even the Shanghai Exchange is growing. You can't have a moving day average on the Shanghai Exchange that is different than the U.S. than the other exchanges. So you're going to have to price gold more fairly. Shanghai has changed the chess pieces on the board. And finally, even the IMF, of which I'm no fan, and central bank digital currency, of which I'm no fan out here in Europe. Well, even their central bank digital currency, to have credibility, has to have some reconciliation with gold. They've said that. So all of these signs, which are way beyond just my conviction / bias, or Andy Scheckman's, or Ronnie Sturfula's, or Luke Roman's, or anyone else's. And by the way, it's not even the gold guys anymore. It's Jeremy Grantham, who's an equity superman. It's Jeff Gundlach, who understands credit markets. Gold is no longer a pet rock or a barbarous relic or the things of sensationalism. It is the reserve asset of the world. It's got a tier 1 status. It's being used in net settle oil trades. It's being used in net settle BRICS trades. It could even become a BRICS currency. It doesn't matter. It will always be a net settlement trade because it is trusted more than any other fiat currency, including the world reserve currency. These are objective facts. These are not sensational facts anymore. You don't need to put on a tinfoil hat or argue about Bitcoin versus gold or argue about the US dollar versus gold. You can do that all day long, but look what the world is doing, not what the different pundits are saying. And even the pundits would agree, even if they're pro-Bitcoin, even if they're pro-strong dollar. We all agree. I mean, I look at Larry Lepard. He's one of my favorite thinkers. We have a lot of similar opinions. Brent Johnson, we have a lot of similar opinions. Larry Lepard is very pro-Bitcoin. I'm not as much, but I respect his views. Certainly Brent Johnson is very strong DXY. I don't have the same opinion, but we all share the same opinion on gold. And that is why, for those, to your point, whether you're middle class or lower class, if you can afford an ounce, a half an ounce of gold, if it takes you time, it's going to be a better savings asset than your portfolio, than your IRA or your checking or savings account. To your point, though, Dunnigan, I'm not insensitive to, and I respect it completely. There are many people who can't get through the month with basic costs. Where and how the heck are they going to buy an ounce of silver or gold, to their mind? And I do understand that frustration. I don't have an easy answer for that. It's very flippant to say, well, anyone can afford an ounce of silver or an ounce of gold. And maybe they really can't. And as I look around the U.S. and I look around Europe, and I've been in many countries this year, wherever I go, whether it's in Germany, France, the U.S., Canada, South Africa, North Africa. I'm not saying that to brag about my itinerary. I've just been traveling everywhere I go. Yes, I'm often meeting with very wealthy clients, but you still see the real world. You still go to the pub, the Kneipe, the Uber driver, the guy who's taking your bags. And when you talk to them, not only do they say they're suffering, you can see it in their face. You can see it in their mood. You can see it, of course, in crime rates. You can see it in political discord. You can see it in public distress. So again, these are no longer sensational things. They're palpable things. And unfortunately, I wish I could say they're going to get better. I wish I could say a particular political party or leader will make it better. It's going to take far more than one person or one term to get us out of this mess. And sadly, to Hemingway's point, I think we're in that stage that's gone from temporary prosperity to permanent ruin. The only thing we haven't got to is war. And that scares me a lot. And I'm not trying to be scary because war seems unthinkable. It's now becoming more and more discussed. Recently, the U.S. has been very firm that China is giving too much help to Russia in its war effort. There's discussion about the U.S. giving Zelensky the capacity to use missiles that can go deeper inside Russia. Russia's response is that will result in a response on NATO. Again, I'm not going to take a pro-Putin or negative Putin, pro-Zelensky, whatever. Ukraine is a very divisive topic, but the very fact that we're at this point is quite scary. Von Clausewitz, a famous Prussian military thinker, he said, like Machiavelli, that war is just an extension of politics by another means. That may have been true in a pre-nuclear era. In a post-nuclear era, I think it's insanity, and yet we're still seeing that there are people who can argue that there are strategic ways to use nuclear weapons, that war is still a policy, and that war, by the way, again, would be good for governments to distract the people, as Hemingway said, from inflation, to distract the people, and they'll be willing to bend the knee to fear and patriotism or rationing or extending the blame from the policymakers to the war makers or the war that you're defending. That seems unthinkable to me. I was just walking with my daughter through the American cemeteries here in France, with the border of Germany and France and Switzerland, and the Meuse-Argonne and in Metz, 10,000 graves for one battlefield. And you see, young boys from Montana, Connecticut, California, Michigan, Virginia, Tennessee, from 1918. The war ended in November. A lot of those graves were dated October 1918 because America came in late in the war. It's incredibly heartbreaking. It's irrational amount of death. It's inconceivable. And that was in a pre-nuclear era. The idea that we're even at this brinksmanship today in 2024, like we were in 1914, in a nuclear era, to me does seem unthinkable. And yet I'm reminded by those cemetery walks that the unthinkable can become reality. And that was very disturbing. So, a very hurt middle class, a struggling currency, a debased currency, and war drums beating in a politically polarized America. Again, it sounds depressing, but I don't really see how we can avoid these topics anymore. And again, I get back to your point. There aren't a lot of things you can do to rely on your central banks or your financial advisors. You can hope for a rising S&P. You can hope that lower rates will be stimulative. You can hope that you can somehow beat inflation, maybe with a better return. But the truth is you're still dealing with a currency that is melting like an ice cube, or as I said in this German conference, like mountain snow in spring. And so you're getting nowhere. That leads to a lot of frustration. Again, you can become your own central banker. It doesn't mean you put everything you have liquid into gold or silver, but you have to have, and we'll say it over and over, you have to hedge stupidity. You have to hedge dishonesty. You have to hedge diabolical Machiavellian, power-hungry self-servants posing or masquerading as public servants. You have to think for yourself. Doesn't mean you have to agree with me or you or anyone else, but I think if you do your homework, you can do what the central banks and the BIS and the Eastern central banks and the BRICS countries and the Europeans are doing. Distrust the American dollar, distrust the American Fed, or at least question it, and you can insure against that type of debasement through hard assets in general and precious metals in particular. And if you don't have a lot of liquid cash, you can at least, I think, put some aside, even if silver is reaching, a little bit higher than it was a year ago, but you can still afford silver. You can still afford a little bit each month. The premiums are very high, especially when you're just buying coins. That can be hard. You know that as well as I, and better than I in some ways. But I think anyone can take a little bit and protect themselves. Our clients have very high net worths, so it's not the same. They're just as concerned, but they're not as at risk as the middle class is. And I think that's the greatest sin of all, the greatest crime of all, is it's always the middle class that are the first to be drafted and the first to be clipped in a recession or the first to be drafted in a war. And unfortunately, the more things change, the more they stay the same. That's why I consider America less of a democracy than it is a feudalistic society of serfs and lords. And that's why I think democracy is less democracy today mathematically. We just don't get representation of the majority anymore. We have coalitions in Europe. We don't have real people's will. Macron in France doesn't have more than 25% of the vote, but he's still in power. Trudeau has about 28%, but through coalition governments. He still has power in Canada. In Germany, Schultz is a coalition government. People realize that they do the math. Their leaders do not represent the majority of the people. In the U.S., you don't need me to tell you, very polarized right now as we head into an election in November. Many would say we don't have a good choice left or right. Again, I'm not here to give a political view. I'm just saying there is a lot of disenchantment, distrust, and there is a lot of wealth inequality. I think the wealth inequality in America is higher than it is in Europe at this point, and it's more palpable. And that wealth inequality creates resentment, and that resentment is never good for a democracy, whatever we want to call it. But again, as I joke, I'm no fun at a cocktail party. This is what I see. And I do see the wealth inequality here. I see the frustration and the tensions, and I definitely see with the euro, even the Swiss franc, which is stronger than the dollar in a lot of ways inherently. I still see people unable to make it through the month, and that that is something new. And I think you certainly see it in America more so than you ever did 10, 15 years ago. Anyone listening can agree with that.
Yeah, I want to underscore one thing you said and then lead it in, back to something you said earlier. What you just talked about, the fear you have about the drums of war beating as the ultimate distraction to get the populace on board, to just abdicate their freedom and their financial futures to the gatekeepers or whatever. This is not a new playbook. That's the oldest one in the books. Basically, in a fallen world, there seems to be a certain narrow sliver of humanity that have decided for themselves that they deserve to be the authority over others and to live on the backs of the labor of others. And when the others when the plebeians start to catch on and get wise to this scheme, then there has to be like a doubling down of the pressure. Now it's a single crisis epidemic. Oh, now it's going to be a pandemic. Oh, now it's going to be a poly crisis. We're going to come out with next. Will it take war? Whatever. What is it going to take to get you to just go, okay, fine. You're the authorities. You temporarily, I cede to you my natural sovereignty, and I will follow you for now because you're the only horse in this storm or whatever. And that's one. And then what that leads to is something that feels to the ordinary person that's beyond their control, outside of their control. So back to the roots of our channel in 2013 when we started was about preparedness. And there's the idea that sometimes, nature, huge storms or other things can happen, big things can happen, and you just want to be prepared ahead of that. You can't necessarily stop the storm. You can try to keep your eyes on it, watch the radar or whatever if you can. But if the power's going to go out or if the storm's going to come, the question is, what assets are you going to have and what relationships and what skills are you going to have to help you and your family have a future and to prepare to survive and thrive? And it sounds like to me is coming back to me is if we can't stop these so-and-sos from thinking they're our lords and masters, we can try. And we should resist, refuse to comply, refuse to give up our freedom, refuse to give up our privacy, etc. To some extent, this storm is in some ways bigger than us. And you mentioned demonic. Absolutely. We need spiritual help along the way to resist because it's evil. It's evil. It oppresses the sovereignty of the individual. We all have equal dignity and that tramples us. But in that storm, that's upon us already and more likely to get worse than not, perhaps going forward, having those assets to protect ourselves is just prudent preparedness. I mean, I was a Boy Scout, be prepared. Mm-hmm. That's part of it.
Exactly. So. And the sad thing is, and I talk about this a lot with my colleagues and our clients and with my friends even, and I do understand human nature and cynicism. When you talk about preparedness, and again, our clients, our minimums are very high. They're millionaires. And yet these millionaires are also very cynical, very distrustful. They're asking about whether they should leave country X, Y, or Z. I have clients from 90 countries, and all of them think one country will be better than another. They have the means to do that, but the point is they're just as worried about their personal sovereignty as someone struggling to pay rent is in Ohio right now. They just have more means, but they still feel somewhat flustered. Where do I go? Is it Singapore? Is it Switzerland? Is it New Zealand? The truth is, it's hard to say. None of those have shown great examples of personal sovereignty or good leadership during the COVID hysteria as an example, as a litmus test. And to your point, you can prepare whether you're middle class or a millionaire by having some personal sovereignty intellectually, spiritually, and financially through hard assets. But what I was saying is, Egon and I have always said this for decades, and Egon long before I was a client and then a partner. People don't want to believe you because they think you're selling your book. I get it. I'm not selling bonds for Goldman Sachs. I'm not selling units in a hedge fund. I'm selling something I believe in. That will sound insincere to many. Well, I could do better with Bitcoin. Why don't you do Bitcoin? Or you're just selling gold because you want a premium. I think Egon and I are past the point where we need the money for our car payments. We actually believe what we say. That doesn't mean we're right, but we sincerely believe it. And I think you believe it, and your people who invest with you believe it. Our clients believe it. But I think what's sad today in a world where there is so much distrust, And where there's always an argument pro or con in every asset class, there will be people who want an answer, but they're afraid to trust. Don't trust Matt Piepenburg, Ronnie Sturfula, Luke Roman, Jeremy Grantham. Look at the history of governments. Look at the history of currencies. Look at the history of gold. It's not a barbarous relic. Look at the central banks today. Modern banks, modern central banks are buying it for a reason. Modern nations are stacking it for a reason. Get beyond the cynicism that we are selling our book or peddling a product. Look at history. And again, if you do, you will see, without exception, from time immemorial, from the first Persian trading huts to the Ming Dynasty to the Romans to Yugoslavia, the 90s, to Weimar, I've said this over and over, to 1789 France, 1720 John Law, without exception, debt-based countries do two things. They go to war and they debase their currency. And the one thing you can do is at least think about sending your son or daughter to a war before they get drafted. I'd say no. And secondly, prepare financially through hard assets like silver and gold. That's, to me, beyond a Swiss-based, high-expensive gold storage solution, or a U.S.-based, or a German-based, or an Austrian-based. Get past the pundits, get past the selling the book cynicism, and study history on your own. Study the history of sound money. Study the history of governments with their backs against a debt wall, whether that was Castro and Batista, whether that was the Bolsheviks, whether that was Weimar, whether that was France, or whether it was Mussolini or Spain under Franco and Mussolini in Italy. Every kind of system that gets drunk on debt goes to centralization, currency debasement, and war. I'm hoping that war in a nuclear era is not one of the boxes politicians can check. But the article I wrote today that comes out tomorrow is literally titled Global Snapshot, Stupid, Broken, and Evil. The evil being the final opportunity. The financial system is stupid. The bond market is broken. The last checkbox we have to distract us completely and take the blame off our politicians is war. And that is one place, then again, where I hope I'm definitely wrong. But I think all of us, whether we're pro-strong dollar or pro-weak dollar, whether we're pro-Bitcoin or pro-gold, we all agree that currency is being debased relatively. We all agree that in the end, whether you're even a crypto guy or whether you're a strong DXY guy, all of the guys I debate with, we all share one thing in common. We believe in gold and silver. And the central banks do, even though I don't like central banks. The IMF does. I don't like the IMF. I don't like central bank digital currency. I don't even like the BIS at all. They're the worst of all. But whether I like them or not, I have to agree that the reason they're pitching and understanding gold as a tier one asset is because they understand that fiat money, including the US dollar, the world reserve currency, is more and more of a laughingstock of its former self, because throughout history, nations with their backs against a debt wall debase their currency. There is no exception to that, none. And what we are seeing today, based the day after another rate cut, which was not a surprise, coming full circle. Of course, Powell's cutting rates. He can't afford higher rates. Of course, he's going to debase the dollar. And eventually, we're going to go from QT to outright QE. And QE is just creating money out of nowhere with a mouse click at the Fed. And if they don't do that first, they'll do it through the TGA account, the Treasury General account. They'll get liquidity through the reverse repo markets, and they'll get it through supplementary leverage ratios, which allows basically the too big to fail banks to create basically QE for the Fed and keep it off the Fed's balance sheet. But they will continue to expand the broad money supply, debase the money in your wallet and in your checking account, and then blame it on something else, or basically, more importantly, lie about the actual inflation or omit it from the headlines because it's too wonky, too complex for the average person to understand. The big secret is you don't need an MBA from Stanford or Harvard to understand sound money. Anyone, and you and I talked when we met about your son, figured this out on his own. He learned this on his own. Anyone who's curious, who's conscious, and who's not going to bend a knee to propaganda and just false bromides from politicians, whatever stripe, anyone who takes the time to study the history of sound money from centuries ago, millennia ago, or decades ago will get the same conclusion. And, it's right there for all of us to see. So we got to get past the cynicism and get to solutions and be, as you said, prepared as a Boy Scout should, but be informed. And to be informed isn't that hard. And the evidence is literally all around us. It's not just an echo chamber of picking the evidence that I like. I wish it would be an easier solution than gold. It's very expensive. I wish there was other ways, but there isn't, and I've accepted that. And I've gone from being a very lucky and successful hedge fund manager to a gold stacker, not because I'm kooky with tinfoil hats. And believe me, in our offices, one of our partners worked at Salomon Brothers for 7 years, the managing director at Morgan Stanley. Egon came from the banking system. I came from the banking system. We're not naive about banks or money or markets. We didn't pick gold because it was just fun. It's because it's the natural understanding, natural evolution of risk. It's a natural understanding of the rigged to fail system that is the banking system. It's appalling. And the more you dig into that, with its fractional reserve banking, the repeal of Glass-Steagall, what banks actually do, it's actually quite depressing. But like it or not, we're not here because we're kooks. We're here because we understand that system. But you don't need to be in banking. You don't need to have an MBA. To my point, like Elijah, like yourself, like millions of others that are figuring this out, sound money and the evidence of why you need it is literally everywhere. And the centralization and the debasement, the centralization of our government, the evidence of that is everywhere, from big tech, big pharma, big media, big military. And the evidence of the distrust that we have in our money is everywhere, from inflation, however it's reported. And sadly, I don't think it's going to be very hard for the bulk of the vast majority of people to start asking harder questions, come up with better solutions. And that's why I love doing conversations like this with anyone I can. Whether they become clients of mine is irrelevant. The more people get informed, and what was that famous quote? Evil is when good men do nothing, stand aside and say nothing. And the least we can do is have a good exchange of ideas or a good debate, but study your history. You don't have to study Matt Piepenburg. You don't have to read my books. You don't have to take a particular stance. Do your own homework. You'll figure this out. You may get into a Bitcoin gold debate. Fine, have it. Do it. But I'm quite convinced, and that's a whole show for another time, that as a store of value, gold is something that is actually there to store value. As a speculation asset, Bitcoin, I wish I'd had more, but that's not a store of value. I'll say it 1,000 times. I'll upset a lot of people. Performance is not a measure of a store of value. It's a speculative asset, but that will upset a lot of people. But like I said, Larry Lepard, like me, loves gold. He also loves Bitcoin. I'm not mocking him. He may know something I don't know, but I do know one thing. We both agree you got to have gold. And again, this goes back to your point. Be prepared. Hard assets with a real value, made from God, not from numbers and bips on a screen, that aren't mined electronically, that are mined physically. Nature's money. The evidence of it is literally pre and post biblical. It's everywhere. And evil, and the evidence of that, the prince of lies, the amount of lies we're told, the lies of omission, the lies of propaganda. I know that gets into more spiritual language, but it's everywhere. The evidence of it is everywhere. I have not abandoned hope. I have not. It's just I'm going to be prepared. You're going to be prepared. We need to be prepared outside of the quote-unquote experts who lead us. Don't bend the knee to what they promise you. Get your own information. That is free. That is powerful. It can't be foreclosed. It can't be seized. It can't be leaned. It's power to have emotions erased and information replaced. You've got to be informed, not emotional. There's power in that. And just understanding this will give you more motivation, I think, to buy that first ounce of silver or that first ounce of gold when you can afford it. But again, I get back to this very sensitive point. I understand from where I came from in the Midwest and how I grew up that many families, they don't have the luxury to think about an ounce of gold right now. They're worried about keeping the rent and the lights on. So I get it.
I wanted to distill part of what you just shared, especially your reference about how you and your team came out of the banking industry and the investment industry, and how that's been used to cheat the ordinary people for a long time. Wayne Jett, the author of The Fruits of Graft, Great Depressions Then and Now, said the greatest evil trick that bankers ever learned to play was to convince the working man that he could not put the fruits of his labor into his own pocket. He had to put it on a piece of paper and put it in the banker's pocket, where they, in collusion with the government, could mark it down or do whatever they wanted to with it, restrict his access to it, etc. But that's a very simple fact, a reality to contemplate on for people. You said it doesn't take a college degree to realize, wait a minute, if somebody's telling me that I can't keep what I made, I gave up part of my life for this, and I can't hold on to that isn't mine. I have to give it to them, and then they have control over it, etc. And it's going to be taken away from me. Something that we all should be resisting. So thank you very much, Matthew. If people want to follow your work, and you do write prolifically, where can they stay connected?
Yeah, so we're at Von Greyerz .gold, or V as in Victor, G as in gold .gold, so VG.gold. And all of our interviews and all of my articles are there. There's a lot of great free information on the history of money, the history of gold. There's a lot of, I think, searing and objectively blunt analysis of politics and bond markets. Again, you don't have to be a client to get the information there about understanding gold. Everyone can do that. And to your point, labor should not be stolen, and the fruits of your labor should not be stolen. And frankly, when was the only time Christ was really upset? It was with the money lenders. If you understand how banking works, if you understand fractional reserve banking, even Paul, even Christ was betrayed by 3 gold or 3 silver coins. I mean, the importance of understanding the fairness of money and the dishonesty of lending, the dishonesty of banking, that doesn't mean that every banker is evil, that every bank has a nefarious agenda. But if you look at the larger understanding of fractional reserve banking, of how they gamble your money, how they debase your money, how money is unequally dispersed in our society, and how inside information, access to capital, interest rates at the Fed funds rate are far cheaper than what the average citizen pays for his Visa or MasterCard. When you understand how these things work, and if you understand that a shoebox with 250 ounces of gold in 1920, if you saved in gold instead of dollars, would still buy you a house in 2024. But the cost of if you put cash in that shoebox, it wouldn't buy you anything. In other words, if you understand the store of value, that the trick of being independent is not losing the value of your money, and that whatever the spot price of gold and silver is irrelevant, because it will always be stronger than your paper currency, which can be taken from you and taxed invisibly. So again, we write about all these things for anyone at vongreyerz.gold or vg.gold. And again, there's a lot there about not just why you should own gold, but how you should own it. I don't believe in ETF gold. It's paper gold. It's a promise of a delivery. It's not actual delivery. There are a tremendous amount of intermediaries and banking risk on those ETFs. So don't think that an ETF allocation is safe. And don't keep your gold in a commercial bank, for Pete's sake. It's not safe. So, it's all there for free.
We've been speaking with Matthew Piepenburg, partner at Von Greyerz. Thank you, Matthew, for joining us here again on Liberty and Finance.
My pleasure as always.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for September 16th through September 23rd, 2024, while supplies last. This week we have a very limited supply of Pamp 1-ounce silver rounds at just $2.75 over spot per ounce. We also have 1-ounce gold Rand elephants from the Rand Mint in South Africa for just $59 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.